Hi guys, good evening. Welcome to the session and also welcome to this mini marathon of Module D of IE and IFS component of JAIIB November 2025 examination. So guys, आपका 2nd of November को यहाँ पर exam है IE and IFS component का, and for that we have been conducting the marathons for the different modules. So we have conducted marathon for module A, module B, module C, and today is this marathon for the module D of your IE and IFS component, in which again we are going to discuss top 100 MCQs of module D, which are important from the examination point of view. So let's start the discussion, guys. So if you have done the preparation, guys, this session will going to help you to revise the things, ठीक है, ताकि आपको confidence आ जाए, and साथ साथ में you have to participate also. So let's start the discussion, guys. Starting with the question number first. Question number first is, which of the following is not a primary segment of the financial market when studied in detail? So options are commodity market, credit market, money market, and derivatives market. So right answer is option number A here, right? That is commodity market. Question number second is, which of the following correctly represents a segment of the financial market that deals with short-term borrowing and lending, generally less than 1 year? Options are money market, capital market, derivatives market, insurance market. Friends, you all have to participate along with me so that you can revise the things. So right answer is option number A, that is money market. Question number third, which of the following instruments does not primarily belong to the money market? Options are treasury bills, equity shares, call money, commercial paper. So which of the following instruments does not primarily belong to the money market? Right answer is option number B, that is equity shares. Equity shares यहाँ पर primary market से money market से belong नहीं करता, it belongs to the capital market. Question number fourth is, which of the following statements about government securities is correct? Options are government securities are issued only by the central government for short-term borrowings. Option number B, government securities are non-tradable instruments representing corporate debt. Option number C, state government issue treasury bills as their long-term securities. Option number D, long-term securities issued by state governments are called state development loans, that is SDLs. So which of the following is correct here? Right answer is option number D, that is the long-term securities issued by the state governments are called state development loans. Question number fifth, which of the following is not a correct feature of a derivative instrument? Options are its value depends on an underlying asset or variable, it usually requires little or no initial investment, it is always settled immediately on the date of trade, or it is settled at a future date. Guys, read the question carefully. Question is saying that which of the following is not a correct feature, right? So incorrect statement you have to tell. So right answer is option number C, that is it is always settled immediately on the date of trade. This is the incorrect statement. Question number 6 is, the value of a derivative instrument primarily depends on which of the following? Options are the value of an underlying asset such as interest rate, security price, or foreign exchange rate. Then the reputation of the issuing company, the fixed price, the fixed rate of return promised at inception, or the monetary policy stance of the central bank. So right answer is option number A, that is the value of an underlying asset such as an interest rate, security price, or foreign exchange rate. Question number 7 is, which of the following statements correctly describes the capital market? Options are it deals only with the short-term financial instruments and provides working capital to firms. It is the market for long-term equity and debt instruments providing funds to government and corporates. It includes only the trading of government securities and excludes corporate instruments. Option number D is it primarily facilitates speculative trading in foreign exchange and commodities. So right answer is option number B here, that is it is a market for long-term equity and debt instruments providing funds to government and corporates. Question number 8, which of the following statements correctly describes the early insurance business in India? Options are life insurance was undertaken by LIC and non-life insurance was by GIC and its subsidiaries. Option number B, both life and non-life insurance were managed exclusively by private companies. Option number C, insurance in India was entirely unregulated before 1990. And option number D is only non-life insurance existed in the early days. So which of the following is correct? Right answer is option number A. Question number 9 is, the Insurance Regulatory and Development Authority, that is IRDAI, was established primarily to which of the following? Merge life and non-life insurance companies under government control, nationalize the private insurance companies operating in India, regulate and develop the insurance sector and allow private participation, and eliminate foreign participation in the insurance sector. So what is the right answer? Right answer is option number C, that is regulate and develop the insurance sector and allow private participation. Question number 10 is which of the following statements correctly describes a mutual fund? Options are: it is a government owned bank that provides loans to investors. It invests only in real estate and physical assets. It is unregulated and operates without any oversight. It pools resources from investors by issuing units and invests in securities according to the scheme's objectives. So right answer is option number D. Question number 11 is which of the following correctly describes the call notice term money market? Options are: it is a market for trading very short liquid financial assets that are readily convertible into cash. It is a market for long-term loans to corporates. It deals exclusively with government securities of more than 5 years. It is primarily for trading in equities and derivatives. So right answer is option number A, that is it is a market for trading very short term liquid financial assets that are readily convertible into cash. Question number 12 is in the money market, notice money refers to funds lent for a period of which of the following: 1 day only, 2 to 14 days, 15 days to 1 month, more than a year. So right answer is option number B, that is 2 to 14 days. Question number 13 is term money in the money market refers to which of the following? That is lending for 1 day, lending for 2 to 14 days, borrowing lending of funds for a period exceeding 14 days and up to 1 year, or long-term loans for more than 5 years. So right answer is option number C, that is borrowing lending of funds for a period exceeding 14 days and up to 1 year. Question number 14 is which of the following statements correctly describes participants in the call notice money market? Options are: only banks can participate and they can act only as borrowers. All non-bank institutions can operate as both lenders and borrowers without restrictions. Banks and primary dealers can act as both borrowers and lenders, while non-bank institutions with permission can operate only as lenders. Option number D, mutual funds can participate freely as borrowers without RBI guidelines. So right answer is option number C, that is banks and primary dealers can act as both borrowers and lenders, while non-bank institutions with permission can operate only as lenders. Question number 15th is which of the following correctly describes the treasury bills? So options are: they are long-term government securities with a maturity of more than 5 years. They are issued only to banks and financial institutions. They carry a fixed coupon rate payable semi-annually. They are money market instruments issued to finance the short-term debt obligations of the government of India. So right answer is option number D here. Question number 16 is who among the following can invest in treasury bills in India? Options are: only banks and primary dealers, any person resident in India including state governments, firms, companies, institutions, trust and retail investors, only non-resident Indians, or only the Reserve Bank of India. So right answer is option number B, that is any person resident in India including state governments, firms, companies, institutions, trust and retail investors. Question number 17, which of the following statement correctly describes a certificate of deposit? Options are: it is a negotiable money market instruments issued by banks and select financial institutions, usually at a discounted price and redeemed at par. It is a long-term government security with a maturity of more than 5 years. It can be issued to minors without restrictions. Banks can freely grant loans against certificate of deposit without RBI permission. So right answer is option number A here. Question number 18th, which of the following statements correctly describes a commercial paper in India? Options are: CPs are government securities issued to finance long-term debt. CPs are collateralized loans issued by banks to corporates. CPs can be issued only by banks to NBFCs. CPs are unsecured money market instruments issued by companies including NBFCs and all India financial institutions to meet short-term funding needs. So what is the right answer, guys? Right answer is option number D here, that is CPs are unsecured money market instruments issued by companies including NBFCs and all India financial institutions to meet short-term funding needs. Question number 19th, which of the following is true regarding the issuance of commercial papers? Options are: CPs can be issued without any credit rating. CPs have a minimum maturity of 1 year and maximum of 5 years. CPs can be issued only after obtaining a credit rating of at least A3 from a SEBI registered credit rating agency and for maturities between 7 days to 1 year. CPs are issued at a face value and redeemed at a discount. So right answer is option number C here. Question number 20th. Which of the following correctly describes primary dealers in the government securities market? Options are: they are banks that exclusively provide loans to corporates. They are retail investors who trade government securities on stock exchanges. They are government departments responsible for issuing securities. They are entities registered with Reserve Bank of India that buy government securities directly from RBI and resell them to create a market. So right answer is option number D here. Question number 21st. Consider the following statement regarding merchant banking in India. Statements are: merchant bankers are primarily regulated by SEBI. They can engage in accepting deposits from the general public. Their services are largely fee-based rather than fund-based. Merchant banking focuses on management-oriented services. Options are 1, 3, and 4. 1 first and second only, third and 2 third and fourth only. So tell me the right answer. Right answer is option number A, that is first, third, and fourth. Question number 22nd. Consider the following about SEBI regulations on merchant banking. So statements are: merchant banks must appoint a compliance officer. They must submit half-yearly unaudited financial results to SEBI. They are allowed to engage in non-securities businesses freely. SEBI can inspect their records to ensure compliance. Options are first, second, and third. First, second, and fourth only, second and third only, or first, second, and third, first, second, third, and fourth, that is all of the above. So right answer is option number B, that is first, second, and fourth only. Third statement is incorrect. Question number 23. Consider the following statements about category 1 merchant banks. Statements are: they can act as issue managers and undertake all activities related to issue management. Statement number second is: they can serve as underwriters, consultants, and portfolio managers. Their minimum net worth must be 5 crore. They are permitted to manage only government securities issues. So options are first and third only, first, third, and fourth only, second and fourth only, or first, second, and third. So right answer is option number D here. Question number 24. Consider the following about derivatives. So statements are: they derive their value from an underlying asset. They are used for both hedging and speculation. The underlying can include commodities, currencies, and financial instruments. Derivatives are independent assets with intrinsic value. Options are first, second, and third only, first, second, and fourth only third and fourth, only second and third. So right answer is option number A here. Question number 25th. Consider the following statements regarding exchange traded and over the counter derivatives. Options are: exchange traded contracts are standardized and traded through exchanges. Over the counter contracts are customized and privately negotiated. Over the counter markets have higher regulation than exchanges. Exchange traded contracts have clearing house guarantees. Options are second and fourth, second and third, first and third, or first, second, and fourth. Yes, tell me. So right answer is option number D, that is first, second, and fourth. Third statement is incorrect because OTC markets have do not have the higher regulation. Rather, exchange traded derivatives are having the higher regulation. Question number 26. Consider the following regarding participants in the derivative market. Statements are: hedgers use derivatives to reduce risk. Speculators use derivatives for profit by betting on price movements. Arbitrageurs exploit price differences in different markets. Only hedgers can participate legally in Indian derivative markets. Options are second and third, first and third, first, second, and third, or second, third, and fourth. So tell me guys, you all have to participate along with me in the chat box. So do let me know, what do you think, what can be the right answer? Right answer will be option number C, that is first, second, and third only. Question number 27th is: consider the following statements about option contracts. So statements are: a call option gives the right to sell an asset while a put option gives the right to buy. Statement number second: the buyer of an option has a right, not an obligation. Statement number third: the seller of an option has an obligation. Statement number 4: the strike price is a predetermined and fixed at the time of the contract. Options are second and third only, second, third, and fourth only, second and fourth only, or first, second, and third only. So right answer is option number B here, that is second, third, and fourth only. First statement is incorrect. Question number 28. Consider the following statements about factoring. Statements are: factoring is a method of financing against accounts receivables. Statement number second is the factor collects payment on behalf of the seller. Statement number third is in India, non-recourse factoring is permitted. Statement number fourth is factoring improves liquidity for businesses. Options are first, second, and fourth, only second and third, first and third, and first, third, and fourth only. So what is the right answer? Right answer is option number A here. Question number 29th, consider the following regarding forfeiting. So statements are, it involves discounting export receivables on a without recourse basis. It is used for short-term trade finance. The forfeiter bears the full risk of non-payment by the importer. It helps exporters maintain liquidity and avoid credit risk. So options are second, third, and fourth, first and second, first, third, and fourth, or first, second, third, and fourth. So right answer is option number C, that is first, third, and fourth only. Question number 30th is, consider the following about trade receivables discounting system, that is TRADES. It is a digital platform for financing MSME receivables. Transactions are carried out on a without recourse basis. RBI introduced TRADES in 2014, or TRADES assumes credit risk of the transactions it facilitates. Options are first, second, and third only, first and fourth only second and fourth, or all of the above. So right answer will be option number A, that is first, second, and third only. Question number 31st, filling of the blanks. Fill in the blanks option is the one which can be exercised by the buyer on or before the expiration date, that is any time between the day of purchase of the option and the day of its expiry. Options are European option, American option, Canadian option, or Indian option. So right answer is option number B, that is the American option. Question number 32. Which category of merchant bank can act only as an advisor or consultant? Options are category second, category third, category fourth, or category first. What is the right answer, guys? Right answer is option number C, that is category fourth, merchant bank. Then further, which of the following is not an example of an underlying asset for derivatives? Options are stock index, gold, fixed deposit receipt, and government bond. So right answer is option number C, that is fixed deposit receipt is not an underlying asset for derivatives. Question number 34th, which of the following is an exchange traded? Which of the following is an exchange traded derivative? Example, options are forward contract, future contract, swaps, customized forward. So right answer is option number B, that is futures contract. Question number 35 is, which type of option can be exercised only on the expiry date? Options are American option, European option, call option, or put option. So right answer is option number B, that is European option. Question number 36, in India, what percentage of the invoice value is generally paid upfront by the factor in a factoring arrangement? Options are 50 to 55%, option number B 60 to 65%, option number C 80 to 85%, and option number D 90 to 95%. So right answer is option number C, that is 80 to 85%. Question number 37, which of the following is true about recourse factoring? Options are the seller bears the default risk, the factor bears the risk of default, it is prohibited in India, or it applies only to export trade. So right answer is option number A, that is the seller bears the default risk. Question number 38, what is the minimum paid up capital required to establish a TRADES platform? Options are 5 crore, 10 crore, 35 crore, or 25 crore. So right answer is option number D, that is 25 crore. Question number 39, who regulates the operation and licensing of TRADES platform in India? SEBI, Ministry of MSME, Reserve Bank of India, or SIDBI? So right answer is option number C here, that is RBI regulates the operation and licensing of TRADES platforms in India. Question number 40th is, the filling the blanks of an option in the specified date predetermined price of the underlying asset at which the same can be bought or sold if the option buyer exercises his right to buy, sell on or before the expiration day. Options are strike price, coupon price, selling price, or stock price. So right answer is option number A here. Got it? That is strike price. Question number 41. Consider the following statement regarding venture capital. So options are, venture capital refers to risk-bearing capital invested in a new and innovative businesses. It is suitable for firms with a proven performance track record. Venture capitalists became financial partners in the business. It is generally high risk and high return financing. Options are first, third, and fourth, first, second, and third, only second and third, or first and fourth only. So which of the following is correct? Right answer is option number A. Question number 42. Consider the following statement about stages of venture capital financing. Statements are: the seed capital stage focuses on product development and lab testing. Statement number second, the startup stage involves commercial production. Statement number third is second round financing occurs when the business has not yet become profitable. And statement number fourth is expansion finance is provided during the seed stage. So options are only second and third, second and fourth only, first, third and fourth only, or first, second and third only. So what is the right answer, guys, for question number 42nd? Right answer is option number D, that is first, second and third. Question number 43rd. Consider the following statement about later stage venture capital financing. Statements are: expansion finance supports capacity addition or acquisitions. Replacement finance involves buying shares of existing shareholders. Buyout deals involve purchase of assets by new entrepreneurs. Turnaround finance helps revive loss-making companies. Options are first, second, and third only, second, third, and fourth only, first, second, and fourth only, or all of the above. So right answer will be option number C. Question number 44. There are several alternatives by which the provider of venture capital finance can exit from an investee company. Which of the following is not one of the exit routes for the venture capital finance? Options are IPO, buyback of shares by the promoters, sale of enterprise to another company, or further public offering. So guys, the question is which of the following is not, right? So negative, you have to tell which of the following is not one of the exit routes for the venture capital finance. The right answer is option number D, that is FPO, further public offering. Question number 45th. Consider the following about leasing. Statements are: leasing allows the lessee to use an asset without owning it. Statement number second, finance lease usually covers most of the economic life of the asset. Statement number third, operating lease involves short-term use and multiple lessees. Statement number fourth is: in an operating lease, the lessee maintains and insures the asset. Options are first, second, and third, first and second only, second, third, and fourth only, or first, second, third, and fourth. So which of the following is correct here? So right answer is option number A, that is first, second, and third only. Question number 46. Consider the following statement about hire purchase. Statements are: the hire purchase agreement is a contract of sale. Second is: the hirer can return the goods before completing payment. Statement number third is: ownership of the asset transfers to the hirer after full payment of installments. Statement number fourth is: it is governed by the Hire Purchase Act 1972. Options are first, second, and fourth, second, third, and fourth, only second and third, or first and second only. So what is the right answer? Right answer is option number B, that is second, third, and fourth. Question number 47th. Consider the following regarding parties to hire purchase contract. So statements are: the hire vendor is the owner of the asset. The hirer pays installments and gain ownership immediately. The hire vendor must ensure goods are true to the description, or the hirer must take due care of the asset. So options are first, third, and fourth, for only first and third, second, third, and fourth, or second and fourth. So right answer is option number A, that is first, third, and fourth. Question number 48 is: consider the following about credit rating. Statements are: it assesses the credit worthiness of an individual borrower. It provides a symbol based grade like AAA, BBB. It helps investors evaluate risk, or credit rating is mandatory for all companies. So options are second, third, and fourth, second, third, and fourth, first, second, and third, only first and fourth, or only second and third. Right answer is option number B, that is first, second, and third. Right. Statement number fourth is incorrect. Credit rating is not mandatory for all the companies. Question number 49th is: consider the following statements about benefits of credit rating. Statements are: it helps investors assesses investment risk easily. Statement number second is: highly rated firms can raise funds at a lower interest rates. Statement number third is: it ensures complete elimination of default risk. Statement number fourth is: it encourages financial discipline in companies. Options are first, second, and third, first, second, and fourth, only second and fourth, and all of the above. So what is the right answer? Right answer is option number B, that is first, second, and fourth. Question number 50th is: consider the following about mutual funds in India. Statements are: they pool public savings and invest according to a declared objective. Statement number second is: mutual funds operate as a trust with sponsors, trustees, and AMCs. SEBI regulates all mutual funds irrespective of ownership. Only public sector mutual funds are subject to the SEBI regulations. Options are first, second, and third, second, third, and fourth, then first and fourth only, or all of the above. So right answer is option number A, that is first, second, and third. Question number 51st is the minimum investment that a venture capital fund can accept from investor other than employees or director is options are 2 lakh, 5 lakh, 10 lakh, or 25 lakh. So right answer is option number B, that is 5 lakh. Guys, you all have to participate in the chat box. Question number 52nd is which form can a venture capital fund be set up as? Options are partnership firm, cooperative society, company or trust, or LLP. So right answer is option number C. It must be a company or trust. Question number 53rd is the Hire Purchase Act in India was enacted in which of the following year? That is 1972, 1956, 1989, or 1991. Right answer is option number A, that is 1972. Question number 54th is in a finance lease, who is responsible for maintenance and insurance of the asset? Options are lessor, lessee, custodian, or sponsor. Right answer is option number B, that is lessee. Question number 55th is which of the following is not a credit rating agency registered in India? Options are CRISIL, Care Ratings, Moody's India, और Brickwork Ratings. तो इनमें से कौन सी क्रेडिट रेटिंग एजेंसी नहीं है? राइट आंसर इज ऑप्शन नंबर सी, दैट इज मूडीज इंडिया. लोकेंद्र, इफ यू हैव एनी इशू यू कैन सिंपली ड्रॉप अ मेल एट support@testbook.com. ठीक है, वहां पर अपना आप जो इशू है, जो भी क्वेरीज है, आप वहां पर मेल कर दीजिए support@testbook.com. वहां पे आपको तुरंत रिप्लाई आ जाएगा. डोंट यू वरी, आपके जो भी इश्यूज हैं वो सारे रिजॉल्व हो जाएंगे. ठीक है लोकेंद्र, support@testbook.com. Question number 56 is the process through which a mutual fund scheme launches a new mutual fund is called new fund offer, new funding offer, or new mutual fund offer. So right answer is option number A, that is new fund offer, that is known as new fund offer. Question number 57th, filling the blanks is a mode of investment in mutual funds by which individuals invest small amounts at a regular intervals in the mutual fund. Options are systematic transfer plan, systematic withdrawal plan, systematic investment plan, or systematic trading plan. So right answer is option number C, that is systematic investment plan, SIP. Question number 58 is what is the minimum subscription amount required for debt oriented mutual fund schemes at the time of a new fund offer? 5 crore, 10 crore, 15 crore, or 20 crore. So right answer is option number D, that is 20 crore. Question number 59 is which organization was set up in 1995 to promote ethical standards in the Indian mutual fund industry? So options are FIM, MMDA, AMFI, CRISIL, or NABARD. Right answer is option number B. Question number 68 is what does the expense ratio of a mutual fund represent? Options are investors annual return percentage, funds annual operating expenses as a percentage of assets, asset purchase fee, and then tax deducted at source. So right answer is option number B, that is funds annual operating expenses as a percentage of assets. Question number 61st is which of the following correctly describes the capital market? Options are it deals only with short-term funds and money market instruments. It is meant exclusively for trading in foreign exchange. It provides only debt capital to government entities. It is a market for long-term debt and equity where funds are issued and traded including both primary and the secondary market. So right answer is option number D. ठीक है जी. Question number 62, which of the following statements best describes the primary market? Options are it is a market where investors trade existing securities. It is meant only for interbank lending and borrowings. It is a market where new securities are offered to the public for the first time to raise capital, or it deals exclusively in government securities. Right answer is option number C. Question number 63rd is which of the following correctly identifies the role of banks in the primary market? Options are banks act as a bankers to the issue arrangers and underwriters. Banks only provide loans to investors to buy new shares. Banks only act as a credit rating agencies for the issue. Banks cannot participate in the primary market in any capacity. Right answer is option number A. Question number 64th is what does the secondary market primarily deal with? Options are trading of securities that were previously issued in the primary market, issuance of new securities by companies to raise fresh capital, sale of government securities only, or trading of commodities and derivatives exclusively. So right answer is option number A, that is trading of securities that were previously issued in the primary market. Question number 65th is which of the following statements correctly distinguishes between auction and dealer market? Options are auction market are the over-the-counter markets while dealer markets are stock exchanges. Stock exchanges are examples of auction market while over-the-counter markets are dealer markets. Both auction and dealer markets are forms of primary markets, and auction markets are controlled by SEBI, but dealer market are not. So which of the following is correct here? Right answer is option number B. Question number 66. Which of the following is a key function of the secondary market for general investors? Options are controlling inflation and interest rates, issuing new shares to raise capital, regulating the banking system, providing a platform for trading securities, and facilitating price discovery. Tell me. So right answer is option number D, that is providing a platform for trading securities and facilitating price discovery. Question number 67, what does demutualization of a stock exchange mean? Options are when all trading activities of the exchange are suspended temporarily, when the ownership, management and trading rights of the exchange are separated from one another, when a stock exchange merges with another to expand its market base, when the government takes over the management of the stock exchange. So right answer is option number B. Question number 68. Who among the following is affiliated to a member of a recognized stock exchange and registered with SEBI? Broker, sub-broker, jobber or market maker? So right answer is option number B, that is sub-broker. Question number 69. Which of the following statements is true regarding the promoters of NSDL and CDSL? Options are both NSDL and CDSL were promoted by the Reserve Bank of India. NSDL was promoted by BSE while CDSL was promoted by NSE. NSDL was promoted by IDBI, UTI, NSE, while CDSL was promoted by BSE jointly with leading banks. Option number D is both were promoted by SEBI as an independent entities. So right answer is option number C here. Question number 70th. Which of the following correctly differentiates dematerialized account numbers of CDSL and NSDL? Options are both have 40 numeric digits. CDSL accounts have IN followed by 14 digits, while NSDL has 16 numeric digits. CDSL account have 40 numeric digits, while NSDL has 16 alphanumeric digits. CDSL accounts have 16 numeric digits, while NSDL accounts begin with IN followed by 14 numeric digits. So right answer is option number D here. Question number 71st. Which of the following statement correctly defines an equity shares? Options are it is a debt instrument representing a loan made by an investor to a company. It represents fractional ownership in a company where shareholders undertake entrepreneurial risk and having voting rights. It is a preference share with fixed dividend rights but no voting rights. It is a type of bond issued by a public sector undertaking. So right answer is option number B here. Question number 72nd. What are bonus shares? Shares issued free of cost to existing shareholders by capitalizing accumulated reserves or share premium. Shares issued to new investors at a discounted price to raise fresh capital. Shares offered to promote of a company as a part of a founder's compensation, or shares issued to preference shareholders for fixed dividend payment. So right answer is option number A here. Question number 73rd. Which of the following statement about preference shares is true? Options are preference shareholders have equal voting rights as equity shareholders. Preference shareholders are paid dividend only after equity shareholders. Preference shareholders claims rank above those of creditors and debentures holding during liquidation, and then preference shareholders receive fixed dividends and have priority over equity shareholders in dividend and liquidation payments. So right answer is option number D. Question number 74th is what is the cumulative preference share? So options are a preference share on which unpaid dividends accumulate and must be paid before any dividend is paid to equity shareholders. A preference share that provides voting rights in special circumstances. A preference shares that offers variable dividend rates based on profits. A preference shares that is automatically redeemed after 20 years. So right answer is option number A. Question number 75th is what happens to the investor's application money when applying through ASBA facility? Options are the money is immediately debited from the investor's bank account on application submission. The money remains blocked in the investor's account and is debited only if shares are allotted or the issue fails withdraws. The money is transferred to the company's account before the allotment process begins. The money is refunded by the bank after 15 days of application irrespective of allotment. So right answer is option number B. Question number 76. Which of the following currencies was not included in the LIBOR benchmark rate calculation? Options are US dollar, British pound, Indian rupee or Japanese yen. So right answer is option number C, that is Indian rupee is not included in the LIBOR benchmark rate calculation. Question number 77th is, why was LIBOR replaced as a global financial benchmark? Options are because it became outdated due to digital currency systems, because of manipulation and irregularities in rate submissions by banks leading to loss of credibility, because the IMF withdrew support for LIBOR, or because central banks wanted to unify all global interest rates under one standard. So right answer is option number B. Question number 78 is, which of the following statement about India's foreign exchange laws is correct? Options are, the FEMA, that is Foreign Exchange Management Act 1999, replaced the Foreign Exchange Regulation Act FARA 1973 with effect from June 1st, 2000, shifting the focus from regulation to management of foreign exchange. The Foreign Exchange Regulation Act 1973 replaced FEMA 1999 to impose stricter control on foreign investments. The Defense of India Act 1939 introduced FEMA on a permanent basis. The Tarapur Committee recommended abolishing all foreign exchange legislation in India. So right answer is option number A here. Question number 79. Which of the following correctly describes an international depository receipts? Options are, it is a domestic financial instrument representing shares of Indian companies traded only in India. Option number B is, it allows investors to hold shares in the equity of foreign companies providing global investment opportunities. It is a loan instrument issued by international banks to Indian companies, or it represents government securities issued by foreign central banks. So right answer is option number B. Question number 80th is, which of the following statements about GDR, Global Depository Receipts, is true? Options are, GDRs are issued only in the United States and denominated in US dollars. GDRs can only be traded in Asian stock exchanges. GDRs are issued by US banks and traded exclusively on Nasdaq. GDRs are generally listed on European stock exchanges like the London Stock Exchange and may be denominated in US dollars, euros, or other European currencies. So right answer is option number D. Question number 81. The principle of utmost good faith requires the insured to, options are, voluntarily disclose all material facts accurately and completely, whether requested or not, reveal facts only when specifically asked by the insurer, disclose information after the policy is issued, or keep certain material facts confidential. Right answer is option number A. According to the principle of insurable interest, insurance can be taken only when the person wants to protect any property. There exists a financial or legal relationship between the insured and the subject matter. The person feels emotionally attached to the property, or the insured owns multiple insurance policies. So right answer is option number B. Question number 83rd is, under the principle of indemnity, the purpose of insurance is to provide profit to the insured after loss, compensate the insured double the amount of loss, cover emotional loss, or restore the insured to the same financial position as before the loss. So right answer is option number D here. Question number 84, the principle of subrogation gives the insurer the right to pay double compensation to the insured, avoid compensating the insured for any loss, transfer the ownership of the insured property, or steps into the shoes of the insured to recover loss from the third party responsible for the damage. So option number D is the right answer. Question number 85th is, the principle of contribution ensures that one insurer pays the entire compensation. The insured gets more than actual loss amount. The claim amount is fairly shared among all insurers covering the same risk, and the insurer can cancel the policy at any time. So right answer is option number C. Question number 86, according to the principle of proximate cause, the latest event causing damage is always considered. The direct, dominant, and most effective cause of loss is considered. Any indirect reason for loss is taken into account. The insured can decide which cause to report. So right answer is option number B. Question number 87, bank assurance refers to which of the following concepts? Options are, selling of insurance products through bank by utilizing the strengths of both bank and insurer, selling of insurance products only through government agencies, distribution of insurance products exclusively by insurance agents, sale of banking services through insurance companies. So right answer is option number A. Question number 88, which of the following statement about the Employees Provident Fund organization is correct? Options are, it is a statutory body under the Ministry of Labour, Government of India, responsible for regulation and management of provident funds. It is managed by the RBI and covers only public sector employees. It was established in 1965 under the Pension Regulation Act, or it operates only for self-employed individuals. So right answer is option number A. Question number 89, under the EPF scheme, what percentage of the employer's contribution is allocated to the EPS? Options are 12%, 3.67%, 6% or 8.33%. So right answer is option number D. Question number 90th is which of the following statement about the public provident fund is correct? Options are the lock-in period of PPF is 10 years and cannot be extended. The lock-in period of PPF is 15 years and can be extended for another 5 years. PPF account can be opened only by NRIs, or PPF allows multiple accounts per investor. So right answer is option number B. Question number 91st. Under the public provident fund scheme, which of the following statement is true? Options are returns from PPF are taxable under the Income Tax Act. Hindu undivided families are eligible to open PPF accounts. Investments up to 1,50,000 qualify for tax deduction under Section 80C and returns are tax free. The interest on PPF is compounded monthly. So right answer is option number C, that is investments of up to 1,50,000 qualify for tax deduction under Section 80C and returns are tax free. Question number 92nd. Which of the following statement about the NPS is correct? Options are NPS is open to all Indian citizens on a voluntary basis except employees of the armed forces. The NPS provides only a fixed pension amount decided by the government. The NPS is managed by the EPFO, or the withdrawals are fully restricted until the age of 75. Right answer is option number A. Question number 93rd is under the National Pension Scheme, which of the following is true? Tier 2 account is mandatory for all NPS subscribers. Tier 1 account offers full liquidity and unrestricted withdrawals. Tier 2 account can exist without a Tier 1 account, or Tier 1 account is the main pension account with the restricted withdrawals, while Tier 2 is voluntary and offers liquidity. So right answer is option number D. Question number 94th. Which of the following statement regarding the Atal Pension Yojana is correct? Options are the scheme is designed mainly for employees in the organized corporate sector. The Atal Pension Yojana focuses on providing a guaranteed pension to workers in the unorganized sector. Pension under Atal Pension Yojana starts at the age of 50 years. Only government employees are eligible to apply for Atal Pension Yojana. So right answer is option number B. Question number 95th is under the Atal Pension Yojana, which of the following is true? Any person above 50 years can subscribe to the scheme. The scheme is available only for Indian residents, not NRIs. The subscriber must be between 18 to 40 years of age and have a savings bank or post office account. Pension benefits start immediately after enrollment. So right answer is option number C. Question number 96. Which of the following statement about infrastructure investment trust InvITs is correct? So InvITs are trust-based financial instruments that allow investors to participate in infrastructure financing and earns return through from predictable cash flows and dividends. InvITs are government-run funds that invest only in rural infrastructure. InvITs were introduced in India under the Companies Act 1956. InvITs can only be formed by banks and financial institutions. So right statement is option number A. Question number 97th. Under the SEBI Infrastructure Investment Trust Regulation, InvITs can be divided into two categories from the viewpoint of the source of funds. Which of the following correctly identifies these two types? Options are domestic InvITs and foreign InvITs, public InvITs and government InvITs, corporate InvITs and institutional InvITs, or public listed InvITs and privately held InvITs. So right answer is option number D. Question number 98 is which of the following statements best describes para-banking activities? Options are activities that involve only accepting deposits and granting loans, activities performed by banks other than their regular banking functions such as deposits and withdrawals, activities related only to agricultural lending and rural financing, activities restricted to government sponsored schemes only. So right answer is option number B. Question number 99th. Which of the following is not typically classified as a para-banking or financial service activity? Options are mutual fund business, insurance business, accepting savings deposit from customers, or portfolio management service. So right answer is option number C. Last question of the day. According to RBI guidelines, banks can undertake insurance business with risk participation only under which of the following conditions? Options are only when their net worth is less than 500 crore, only through direct partnership with insurance agents, only after approval from the Ministry of Finance, only through a subsidiary joint venture subject to criteria like net worth, NPA level, profit record, and satisfactory subsidiary performance. So right answer is option number D here. So guys, this is all. These all are the 100 questions with respect to module D of IE and IFS component, and tomorrow we are coming up with a, you can say, marathon for all the modules of IE and IFS component, right? So stay tuned and you have to participate, you have to be in the session, because that session will going to be a game changer in your examination to be conducted on 2nd of November. So thank you very much for watching and listening me. This is all. And in future, if you subscribe any course on the textbook platform, you can just use the code Prakash, through which you will get maximum discount. And साथ में आप मेरा Telegram group भी join कर सकते हैं. After joining this, you will be in touch with me. If you have any query, any doubt, you can directly ask me over the group itself. So good night, bye bye, take care. I wish you all the very best. We'll meet you tomorrow in long marathon, right? Bye bye, guys. Take care.